We're shifting gears now to the energy industry. The rising cost of oil is spurring some energy companies to drill in the once abandoned shallow waters off the Gulf of Mexico. We have Dan Gilbert, who is joining us this morning with more on this. Dan, this isn't a unexplored area, but it was once abandoned. Tell us why now energy companies are heading back to the shallow waters off the Gulf.
Well, this is basically an oil story. What is happening in the shallow water Gulf of Mexico is that it's mostly been a place that yielded natural gas in recent years. But because there is still oil there, and because oil is priced so attractively right now at well over $100 a barrel, this has spurred new investment by the companies that are still trying to wring more oil from these thoroughly explored fields.
Well, and Dan, you mentioned additional exploration in shallow waters in the Gulf of Mexico, and it raises some bad memories. Are there any safety risks associated with what seems like a relative explosion in drilling activity in shallow waters?
I don't know if I'd go as far to say it's an explosion, but it's definitely a pickup, and a significant one. And as far as the safety issues go, there is a pretty significant difference in drilling close to the coast, in shallow water that's usually 500 feet deep or less, and where the drilling is taking place at a shallower place below the seafloor. And then drilling in the deepest waters in the Gulf, which is what you might think of from the Deepwater Horizon disaster in April 2010. That's a much more costly, much riskier type of drilling out there. So the shallow water is seen as comparatively low risk, and despite the occasional hurricane, you don't have a ton of risks, or at least the same kind that you would incur out in the deeper waters.
And Dan, I understand that there's been a vast improvement in the technology, especially the seismic technology, that gives companies a clear picture of exactly where to drill. Tell us a little bit about how the developments and advancement in technology has changed how oil companies can go after oil reserves.
Well, sure. One of the knocks on the shallow water Gulf of Mexico is that it's so well known and it's so thoroughly drilled, but that's also one of the advantages. And that companies they know where the oil is, and they have a lot of geologic data that they have accumulated through drilling all of these wells. And now what they're able to do is to take that geologic data and reprocess it through more powerful computers that give them a much more finely grained idea of where to target the oil that they haven't been able to bring up.
But Dan, explain to us the profile of the companies that are engaging in this shallow water drilling. We're not really talking about the ExxonMobils and the Chevrons and BPs of the world, are we?
Well, we're not talking about ExxonMobil, because ExxonMobil did sell its shallow water Gulf properties late 2010 to a smaller producer, Energy 21, whose name actually suggests their technology-focused approach. And you tend to see smaller players there because most people don't believe that there are massive fields yet to be discovered in the shallow water Gulf, besides possibly very, very deep gas. So the ExxonMobil and the larger companies have tended to push out into the deeper water where they think there's more oil to be found. However, you do still see Chevron, for example, that is still actively drilling and producing in the shallow water Gulf, and some other fairly big players like Apache.
All right, Dan, thanks so much for joining us this morning. We appreciate it.